Landlords cannot increase rent between tenants. That's going to be a big problem in multiple ways, and stay tuned to find out why. The next article we'll be talking about will be Toronto condo rents hit record high as renters face extreme affordability. Yeah, it's really bad right now. Then we got Toronto condo sellers are giving up on resistant buyers, and basically a lot of them will be changing from selling to renting, and how it all kind of ties in because we're in the summer of like hectic rental right now, so stay tuned for that. And then the last few articles we got here, it's a big one. It's a big episode. We got TIFF being tested for their credibility, saying path to soft landing is narrowing. This is the Bank of Canada. And then you got our favorite province out west, BC slaps 3-day cooling period on real estate sales effective January 1st, 2023, likely coming to Ontario. And then you got the final one here, like I've been saying the whole year, another pre-construction hoo-ha, let's call it, where people are faced with six figures closing costs. Yep, it is going to be a big time episode with a lot of things to cover. So if any of these topics are concerning to you, or you're looking for some help in regards into real estate, specifically in the Greater Toronto area, and you're looking to buy, sell, or invest, you're more than welcome to book a call with me using the link on the screen right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I operate a RE/MAX in the Greater Toronto area, on top of making awesome YouTube content like this, where I react to crazy articles that are coming out left, right, and center in this week. So the first one we got here from Toronto Star. Landlords shouldn't be allowed to raise rents between tenants, says Toronto's top housing official. I'm already losing my words today. So the first thing I want to show you is, they have a poll here, which is totally awesome. Love that. Great job, Toronto Star. And you can see that a lot of people are discouraging it. Now, I'm going to give you a little bit of history of kind of where rent control is and what the difference between a lot of these are. So back in 2017, the Liberal parties actually put rent control in, meaning that you could not increase your rent past a certain amount. And it basically was because a landlord doubled their rent on someone who worked for the CBC, and it caused a trickle cascading effect of a whole bunch of stuff that happens, and voila. And then when the Conservatives came into the power in 2018, instead of kiboshing all of rent control, what they did is all the buildings that were closed and occupied before November 15 in 2018 were still under the rent control that the Liberals passed. But any building that was built after 2018 was no longer under rent control. So if you had, like, say, a condo that just closed recently in the last, 3.5 years right now, it is not under rent control, and you can increase it by as much as you want after the term of the lease, generally 1 year. For the record right now, I think 2023 is 2.5% rental increase. So it's gone up a little bit, and people are arguing it's a lot, but relative to inflation, it's nowhere near close, right? So that's kind of the history right now. And what they're trying to propose right now is saying that because buildings that were built before November 15, 2018, say you had it rent a one bedroom for $1,500, the minute that tenant leaves, even though they're under rent control, when you get a new tenant in there, you could increase it to market rent. So let's say the market for a one bedroom in downtown CO1 area right now, you're looking at like $2,300, $2,500, depending on the size. So you're going from $1,500 to $2,500, which is a lot. So what they're trying to do is limit that increase. Now, how they're going to have to do it is basically have to register and put a beneficial registry, which is later in this article, about how they're going to do it. I mean, the city can barely enforce the Airbnb stuff that they implemented in 2019, and they're trying to do it now. But anyways, I don't want to digress. My point here is they want to limit that rental increase, which is going to discourage a lot of landlords from actually wanting to be landlords or investing money to provide supply, like housing, right? So yes, this may sound great for tenants, but you have to look at the kind of trickle down effect, right? So most of the supply right now is supplied by mom and pop landlords, but there's a lot of big pension funds out there right now with tons of money who are building purpose-built rentals. And if you get capped on the rental, basically it's going to be like, hey, look, you're screwed, and it's going to prevent them from wanting to build them, right? Because when inflation goes up, taxes go up, maintenance goes up, they're not going to be like, well, we don't want to build something like that where our income is capped. The analogy I'll give you this is, if you're working a job, say you go to your job, you make $100,000, they're like, hey, you do great job, but yeah, you're not going to ever make more than $100,000. And as everyone's been talking about inflation right now, if inflation goes up, prices go up, right? Cost of car, gas, all the food and everything, right? So because you're capped at $100,000, you're kind of screwed because your cost to live goes up. It's the same thing in this. If you can't change rents in between tenants, then what's going to happen is basically, well, why would anyone want to go there, right? You wouldn't want to work in a job that caps you, right? So that's kind of the analogy I'm going to give you, and why I honestly think this is probably like ridiculous if it gets ever implemented. It's going to be really, really bad for landlords in the beginning. And kind of like 2017, it's just going to cause a giant rent spike because no one's going to want to rent it for less than a certain amount. And then it's just going to be basically kind of like a game of chicken, and who's going to hold out more. And those who can hold out will hold out, and those who can't hold out won't hold out, assuming it gets implemented, right? So, bonus question. Put in the comments below if you guys know where this photo is taken. It is downtown. So, some of the parts I highlighted here was not including any cases where tenants have asked but leave or form application is never filled. So what this part means is that they're bringing it up for the fact that people are being kicked out due to rental evictions, right? So rental evictions, I think, is the wrong terminology that they're using, at least from when I do my practice, right? I always encourage my clients to do the right thing, because doing the right thing, the tenants will understand and they're better tenants for you, right? But rental eviction is such the wrong term for what people are doing, because rental eviction is actually not correct. So I'm going to show you. So in the landlord tenant board, I don't know where the person's getting the information from. You can see over here that if you are to renovate, and I highlighted here, the tenant is given notice because of extensive repairs or renovations. The tenant can choose to move back into the rental unit after the repairs and renovations are complete. The rent must be the same as the rent before the tenancy was terminated. And before the tenant moves out, the tenant must be informed the landlord in writing where they're going to be living. And ultimately saying the landlord cannot refuse to allow the tenants to move back into the rental unit if the tenant has been provided written notice. So a lot of people have asked me before, hey, can I renovate my place and then get the tenants out? And my answer is like, no, you can't. And why would you? Because you're basically renovating. You can't increase the rent. The tenant's allowed to go back. So the idea of renovation doesn't make sense. Now, if you're tearing down the house and building something, absolutely. And even if you were to renovate and the tenant doesn't want to come back, you have to give them back a compensation. So if it's an apartment, 5 units or more, it's 3 months. If it's a regular house, less than 5, right? Not commercial, then it's 1 month's compensation. So there's a lot of ways that I guess people are getting evicted, but I don't think rent eviction is one. The most common one really is like my family is moving in, right? And as long as they don't get caught, then the tenant has to leave out. But a lot of tenants, understand their rights right now, so they want affidavit signed. They look at see where the property is can rent it again afterwards. So you got to be careful. Right, but I think that's how a lot of people are getting evicted. Now, obviously, there's stuff kind of like in between the lines where some people don't know their rights as landlord or tenants, and that stuff gets kind of murky. And some people take advantage of landlords, some people take advantage of the tenants. That stuff, I'm just going to leave it in the air because that's not where the rules are stated. So when the article here is talking about rental evictions, I don't really think that that's what she's mentioning, but it's just more so like if people are getting kicked out of the property and then the rents go up, it's not really fair to those people, right? At least from the tenant's perspective. Now, the next thing I highlight here is the information saying that they need some kind of beneficial ownership about what that property is going to be rented for, and they keep that database and continue on. Like I said earlier, Toronto can't even implement the Airbnb license. I don't know if and when that happens, how they're ever going to do this. And the other thing is, if they ever plan to do a beneficial ownership for rental buildings, they really should do it for like corporations owning properties, because if you ever read the book Willful Blindness, it talks about how a lot of foreign money that's being washed into our mortgage system, and we need it for the purchase side for FinTrack for that reason instead of this rental stuff. So yeah. Anyways, if it does get implemented, I think the implementation and the action is going to be really difficult to be working on. Now, the last thing here is, and this is very important. So I was talking about how the pension funds aren't probably going to do it if you can't even increase the rents anymore, right? So if you can't increase the rents even from the mom and pop side, what mom and pop landlords can do is going to actually be less incentivized to maintain and repair the building, which is what I've highlighted here. And very good example of this is if you ever look at Toronto community housing, those houses are in really bad shape because they're actually not maintained well. Topic for another day, right? But if you have good rent and you're providing good product and you're paying the market value of something, then the person is incentivized to provide you good service, right? Again, analogy I always use is if you're going to a restaurant and you know you're gonna get tipped 15%, wouldn't you want to provide good service? But if you know you're not going to get a tip, maybe they're not incentivized that way, right? So there needs to be an incentive for a product to be produced. So if you don't have the incentives to increase the rent, then the landlords, the mom and pop ones, aren't going to do anything to maintain the property, which means that property is going to be terrible or it could be unsafe. But that person doesn't want to leave because now they're under rent control and their rents can't go up, right? So you see, it's like a really bad, hard way to balance things, but everyone's very captured by the fact that, hey, I don't want my rents to increase, but that could be a really, really bad trickle effect moving down the road. Now, I did pull a couple of charts here for you to show you kind of why it's really critical to not put rent control in. So in 2018, when the PC government abolished rent control, like I was saying, I think it was like somewhere in the summertime, you can see that in Canada, the multifamily starts, meaning apartment buildings, it kind of starts skyrocketing. Now, obviously, this is Canada data, but Ontario and BC makes up a big chunk of where the apartments go because that's where most of the demand is, right? Keep in mind, 40% of the population lives in Ontario. So you can see that over here, the starts, there are more starts, right? That's what I'm trying to get at, and it increased, right? Obviously, there's a little dip during the pandemic, but it's been increasing steadily ever since. And then when you look at here, the amount of properties under construction, same thing. I just highlighted a red point here. Now this shows you condos being built, single families, and the orange line, which is the rentals. And most of them tend to be apartments, have actually gone up since 2018. Because when you kind of not cap someone's ability to make income, again, this is me being a little bit more capitalistic, right? Then it kind of incentivizes them to build more. Like if a builder isn't gonna make money, why would they build? Therefore, we get less housing. So this is the problem with like commodities going up, and I talked about it in a different video before. So you need to have a proper incentive structure. And the last thing I want to touch on this topic is it's a very sensitive topic, and a lot of people have kind of sent me this. Look, if you're a landlord and you're concerned about what this could do to you and your rentals, look, the bottom line is these people who are talking about this and they're getting backing of it is Toronto based. So for you to change the legislation, it's a provincial based thing. So it means it has to go from the city level, like so I guess John Tory, and then has to go up into Doug Ford, right? Yeah, Doug Ford into the PC conservative government, right? So it's not like it's implemented here yet. It's like just agreed upon in the city level, and they're trying to raise it to the provincial level, and they'll have to vote for it again. So it's not like it's implemented just yet, but the fact that they're talking about it probably means it's kind of be in the works. It may be coming up in the municipal election later this year. And what's going to happen is as more and more people become renters because they're priced out of the market and we're becoming a little bit more socialistic, what's going to happen is the rent are going to eventually get capped. If you look at all the kind of big cities, they all get capped, and because people kind of say, hey, the landlords are the bad guys and the government will do something about it. Because for the politicians, it's all about getting reelected. And if more people are renters, then there's more voters that are renters. And then the rules will be kind of skewed towards the favor of the renters, even though it could have a really bad cascading effect. But I'm not going to get political. I'm just going to leave it at kind of that moment. So that's kind of my last kind of comment for you in regards to all of this if you are a landlord. Now, one of the other things that kind of circles around this is the fact that rents are crazy high right now. They are absolutely bonkers, right? So Urbanation, really good research firm, is now saying that rents are basically up 17%, up to about $2,500 on average. That's kind of what their research has shown me. So I pulled some data for you, as again, just kind of a nerd, right? You can see here, this is the historic trend of the Toronto area. This is all properties, not just condos, right? You can see we started the year in 2,400 and now we're at 2,900. That's a 20.6% increase. That's wild. And I can crazy stories I can tell you a little bit afterwards about the rental market. Now we just look at condos, and there's obviously more condos, but there's more demand for condos right now because everyone's going back into the city, right? I talked about it in the last video about the reverse pandemic trade. And you can see that we're up 21.7%, and you're looking at $2,700 on an average condo in Toronto right now. It's higher in the downtown area. Now, the thing I want to show you is, like, you can see over here, I kind of mapped the trend back into 2019. We had that big lull in pandemic. We recovered basically last year, and now we're just shooting straight up. So we've actually increased from like the bottom from a while ago. And that's why when people are saying like, look, the rents have recovered, they're more than recovered right now. And if you kind of want to look at this, this is strictly for condos as well in the same manner, right? So having saying that rents are extremely unaffordable is totally wild. So I'll give you a couple stories. There's a lot of people who are coming in, such as like Ukrainian refugees. There's a lot of international students. It's the largest admission ever in Canada, like even Toronto based. So like the universities are letting a lot of them in admissions, so they need rental places in September. Then there's the regular students, the locals, and then we have the most amount of PRs coming in ever. And then on top of that, because interest rate hikes went up, people aren't buying. So people who are holding like 20%, like hundreds of thousands of dollars in down payment are also renting. So that entire cohort of funds just coming straight in and be like, I would like to rent your place, please. Here is 1 year's worth of rent. Please take my money. Like literally that is what's happening right now, right? So you have to understand this was like a giant conversion of all these things. It's not going to be consistent like this. And I do think we'll probably slow down in September, but where the rents can go from now to like, call it mid-August when things kind of peak, I would not be surprised if we're seeing like 5 or 10% increase. It is like really wild. Now, the crazy thing is right now, because interest rates are still much higher, your cost to own is still far greater than what it is to rent right now. So they're saying like right now, even though the rents are so high, the cost because of interest rates are higher is about $1,100 more per month to own than it is to rent. I did the math roughly. We may be using different numbers, but to buy the same condo, I used a $750,000 purchase price, taxes, maintenance, like $350 a month for maintenance and $2,200 for taxes. And so like downtown, 1 bedroom, 1+1 condo downtown. So for you to own that thing, you're about like $3,200. To rent it, you're about $28. So like the spread is, sorry, not 20, 26. So then you're 26 right now. So the spread for me in my calculation is about 600. But it's just to show you like right now renting is still a more affordable option than it is to buy. And granted, like for you to buy, you would still have to have the down payment ready and qualify to do stress test. Video up here if you haven't know that. So there's all that kind of stuff going on. So it's not to say that because rents are going up, prices are going to come up afterwards. It still makes a lot more sense if you're like just looking at the monthly amount to rent. Now, if you found any of this information useful, and because this is very controversial topics and you want to share this and talk about it with your family and friends or anyone who's kind of in the real estate space, do me a favor and hit the like button so it spreads knowledge out there to everyone. And while you're at it, just click on the subscribe button. And if you're ever looking for some help, because we know a lot of our stuff right now, whether you're buying, selling, or investing, and you're looking for our help to transact in the Greater Toronto area, you could book a call with me to kind of determine how to navigate what you're trying to do, because everyone's situation is generally pretty different. Like everybody I talk to, even though I make these topics, right, it applies to some people, but everyone's financial situation is different and what they're trying to accomplish is different, right? So while it might be good for some people to be transacting right now, like people move up buyers, it's actually the terrible idea for people who are downsizing because you're losing a lot more money, right? So you got to kind of apply the total things that I'm talking about right now into your situation. And if you kind of want to call about that, you can book a call with me using the link right here. It's www.chatwithzen.com. Alrighty, let's move on to the next article here. Oh, actually, I had one thing I was going to say. So while on the landlord getting evicted here, you're supposed to serve an N13 notice. And you can see right here that says if they want to move back, you're allowed to move back. So whoever is doing this rent eviction stuff, shady stuff. Anyways, so the next one here. Toronto condo sellers are giving up on resistant buyers. So I highlighted a couple of things here. It's going to be adding on to some of the rental things I talked about, but essentially this person is starting to see a shift in the rental market and saying that a lot of the owners who aren't even getting showings or get people to sell it, they're basically turning to the rental market. And I can see that a lot with a lot of people right now because people are just really, really hesitant to buy because they don't know where the bottom is, when interest rates are going to stop going up. So this uncertainty is preventing people from making a really big decision in their life. So they rather rent, stay on the sidelines for a year and see what happens. And then if the opportunity presents itself, they'll go buy. And that's what I was saying earlier, right? Like it's a whole convergence of people that are coming to rent. And that's why rental prices are sky high right now. And then we got the next article here. Our credibility is being tested. Tiff Macklem, this is the head honcho guy at Bank of Canada, not everyone necessarily knows him, says that a soft landing is basically they increase the interest rates not to negatively impact the economy as much. A hard landing is like, boom, recession, crash, right, is narrowing. So last week they increased the interest rates by 1%, right? And this is what I'm saying. Bank of Canada Governor Tiff Macklem acknowledges the central bank's credibility has shaken as inflation hits multi-decade highs and the institution faces criticism for not moving rates sooner. So let me unpack that here and why I read it to you. They were, again, wrong on the transitory. They were also wrong on not increasing interest rates last year. And then now they're potentially also wrong at increasing rates too high. So a lot of people are losing faith in the Bank of Canada. And now that inflation is at a 4-year high, it's at 8.1%, US is at 9.1. They basically were like, all right, we got to do everything in our power to prevent inflation. And while everyone's focused on interest rates and real estate, because you're watching this video about real estate, right? There are overarching things that the interest rates affect more than real estate, right? Even though a lot of it is real estate, but they need to kind of set inflation back. The problem with all this, and I've talked about it many times, is increasing interest rates doesn't produce wheat, flour, gas, and food, right? So while they're doing this, at some point, the soft landing that they're trying to accomplish, I don't think it's going to happen. It's going to come to like a really, really bad stop. And like I said in the last week's video, they're probably still likely to hike in September. Now, this is the part that's actually interesting, right? So they said the part that is under our influence is the recovery and the excess demand and the faster than expected recovery that accounts for about a quarter of the miss. So what they're saying is right now there's too much excess demand, so they're trying to curb it, hence increasing interest rate. But they're actually thinking that the job market is still very steady. But you have to remember, if we go recession, people start laying people off and it's like a trickle-down effect, right? So that's why they're saying, yes, we would probably have to start raising rates a little bit earlier, but we didn't know. And that's kind of the thought on why they're losing credibility, right? As the job market, and this is why I'm saying they're a little bit slow and behind the wheel a little bit, they could be hiking into a recession because we could technically be in a recession right now, but just the data hasn't come up, like a technical recession, 2 quarters of GDP decline. And as they increase rates really, really high, the trickle-down effects are going to take some time to get into the economy. And by the time they get into September and they do another one, it could be even more negative. So kind of like instead of hiking rates earlier, like they said in this little snippet here, they may be hiking rates too far into where we are economically right now. So this is why I'm a little bit concerned and bearish about where to go. And I've been telling everyone just go on the defense right now with their portfolio and see what happens. Because even if interest rates kind of drop and the market's priced it to 2013 for the first drop, and again, they could be wrong, you have to endure all the poo-poo that could happen between now and say 2023, call it Q1 or Q2. It's still 4 to 6 months, right? So you got to be extra cautious about that stuff. So is the Bank of Canada going to increase rate in September? That's a magical question. I still think they are, right? Now, the last thing I'm going to point out is we do think there's a path to a soft landing, but it's very frank that it's getting narrower and narrower. This is them trying to say that they still have it under control, but the fact that he admits it's not under control, I guess is a good start. So brace yourself. Yeah, brace yourself. All right, next article here. We got British Columbia slaps 3-day cooling off period on real estate starts January 1st. So generally, most stuff that happens in the West Coast usually comes to Ontario at some point. So I wouldn't be surprised if we get this. So effectively, basically last week, they said that they're going to now force 3-day conditional period, allowing people like buyers who buy something, assuming, there was like multiple offers, and they are mandatory to have that 3 days in which they could back out. Now, there's obviously a cost to this, which I kind of like. I think the cost is about 0.25% for every $100,000, or sorry, 25% of the purchase price. So that means for every $100,000, you have to pay $250. That's what it is, $250. So on $1 million, you can back out of your deal for $2,500. So here's kind of my initial thought. We're in a buyer's market right now, almost, right? You don't really need this. It's being implemented a little bit too late, like with most things, too little, too late. But cool, like let's implement. It's fine. I was talking about this like way back. I forgot when I made the video, but if I can find it, there'll be a link video up here. But I was talking about, it'll make transacting very interesting, right? So let's say someone does want to buy it and then, they have cold feet after and they back out. The second person, are they going to wait to buy that house hoping to have cold feet, or they're going to move to the other place? It kind of makes the shift around very difficult. And because that person doesn't have a firm offer, that person can't go buy another. So it's kind of like putting a pause in the duration in which a transaction happens between families. And it could be a good or bad thing. Like I'm all for transparency and helping kind of buyers not make the wrong decision, right? But also that's kind of the buyer's fault. They should really have some financial education and know what they're trying to get into. But this is actually good. It's just, I think the real estate market and the kind of transactionary side and realtors, mortgage brokers, we're going to have to get accustomed to how this is going to go with our kind of workflow and how the transaction side could be held up. And those 3 days cooling period, it's not the end of the world because like in the market right now, there are conditions. It's just when a really hot market, when people are trying to throw money at you and they want a firm offer, some of the strategies may have to get reworked. And I do have a couple things that I think is going to have in my mind, but without this coming on Terra, I'm not going to just hypothecate for no reason and make this video any longer than what it should be right now. So next article and the last one. Buyers of pre-construction townhomes in Mississauga get hit with 6-figure closing costs. This one is a whammy. So a lot of people were being hit with a bill of $70,000 to $170,000. Look, here's the kind of the silver lining, and people who are in this situation probably want to hear it. At least you got delivery of the property. The unfortunate thing is that now you're paying extra for it. So the ultimate thing that I would kind of encourage everyone who's looking at pre-construction, which I don't recommend for most people anymore, and I've talked about it many times, but is make sure your development charges are capped, right? So this is in the contract. And yes, even though in a very hot seller's market, the builder is just going to take it or leave it, that's a decision you must make on your own. So while some people are caught off guard, maybe they just didn't read the contract or they just didn't do their due diligence, which is very normal, because I know a lot of people, when I say, hey, do you want my lawyer to review this contract when we're doing pre-construction, they're like, nah, it's good. Right? So it's a very common thing. People don't want to read it. So when we do look at it, we always say, hey, make sure the development charges are capped. And usually they're like range between like $10,000 to $50,000. Now, the thing is, there's like a statement of adjustment going around, seeing if there was extra development costs being baked in and coming back at the profits for the builders. I don't think that's the case. So what they're saying here is that the development charges that got added on aren't profits for the builder. And if they do say they are development costs, then this is all in the right. Because what happens is that development cost, and when the builder gets a piece of land, they have to develop some green space, parkland, levies, all that other stuff, right? And when you have less and less people kind of buying into the project, I think this one was like 70 something homes. Yeah, here are 74 homes. Then that means that's less people to share that property. So it makes sense that the prices are higher. And that's what I'm saying. If you're going to some kind of project, to make sure it's capped, because even though say a builder digs the ground right now, the development charges could change over time because it's a city that is increasing those costs. So like I've said many, many times before in the pre-construction space, the cost from the city and the taxes, all that stuff that gets passed to the builder passes it to the buyer. So ultimately it's a buyer that's paying it. So when the city hikes development costs by 49%, like I talked about previously, it's the buyers that end up paying for it. Ultimately, it's just a pass-through for the builder, but the builders shouldn't get blamed for it. Look, I'm not trying to defend the builders because I haven't seen the full statement of adjustment, but that story kind of checks out, right? It kind of does. So again, if you're buying pre-construction, especially in a low-rise segment, like a house on the ground, right? Just check your development charges because they could get really wacky if all this stuff is true. Now, that was a little bit of a longer than I thought, but hopefully it gives you an idea of what's happening, because I know there's a lot of craziness happening in the rent space. A lot of landlords can be concerned about the rent increases, then there's a crazy high rent increases, and there's obviously the inflation. I thought it was going to be a little bit sort of a slow summer, and I thought this would be a little shorter video, but guess not, right? But if any of these topics are kind of a touchy point for you, or they may affect you in some kind of way, shape, or form, and you are looking for some help, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.